quality, value, low volatility. What if one fund could combine them all? That's the idea behind Bandhan Multi-Factor Fund, an actively managed equity fund built on smart investing principles. But is this strategy too smart or just right? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So, as this is an NFO, it opens on 10 July 2025 and closes on 24 July 2025. And some of the key features of the policy are: this is an open-ended fund type which belongs to the category of equity thematic, and it has benchmark index of BSE 200 TRI, and also an exit load of 0.5% will apply if you choose to redeem it within 30 days. There is no entry load, and the minimum investment required to invest in this NFO is 1000 rupees. And the fund managers for this fund are Mr. Rishi Sharma and Mr. Brijesh Shah. And according to the riskometer, the risk involved in this fund is very high. So the primary investment objective of the fund is that it seeks to generate medium to long-term capital appreciation by investing predominantly in equity and equity-related instruments selected based on a multi-factor quantitative model. Now, as we have a basic understanding of this fund, let us now move on to the analysis part of the video, where we are going to analyze the pros and cons of investing in this NFO. So let's start with the pros. Number one, multi-factor strategy for smarter stock selection. Instead of relying on just one factor, the fund blends quality, low volatility, and alpha to find well-rounded stocks. Number two, actively managed advantage. Unlike a passive index, the fund manager can tweak the portfolio based on evolving market conditions. Number three, broad universe based on BSE 200 TRI. It draws from the top 200 listed companies, offering access to both large caps and mid caps. Number 4, diversified factor exposure. Helps reduce over dependence on a single investing style, which can smooth out returns. And number 5, suitable for long-term investors seeking consistency. So if you are not chasing quick gains and prefer steady rules-based investing, this fund might appeal to you. So these are some of the advantages of investing in this NFO. So now let us take a look at the disadvantages, the cons of investing in this NFO. Number one, complex strategy may not be easy to understand. For beginners, terms like multi-factor, alpha, and volatility can sound too technical. Number two, performance can lag in trending markets. In sharp bull runs driven by momentum or sentiment, factor-based strategies may underperform broader indexes. Number three, active strategy is equal to higher expense ratio. Since it's actively managed, the fund charges higher fees than passive alternatives. The performance has to justify it. Number 4, new strategy, limited track record. So the fund is relatively new and still building credibility. There is no long-term data yet. Number 5, still depends on manager execution. Despite using a rule-based framework, the success of the fund depends on how well the fund manager applies and adjusts it. So what is the final takeaway? Bandhan Multi-Factor Fund brings together smart investing ideas and active decision making, a unique mix in the Indian mutual fund space. It could suit long-term investors who understand factor investing and want diversified exposure beyond plain vanilla equity. But remember, complex doesn't always mean better. Make sure it aligns with your goals and risk tolerance, and when in doubt, speak to a certified financial planner. So basically, our personal recommendation is that if you are a first-time investor and even a conservative investor who's not willing to take a lot of risk, you can definitely avoid investing in an NFO like this. But if you still want to invest in a thematic fund like this, there are other similar existing thematic funds with a track record of at least 7 to 10 years, where you know that it has performed across all market cycles, and you can understand and analyze how it has performed in the highs and lows to be be able to take a well calculated risk. But without research, investment in this will be blind risk because you don't know how it's going to perform, as this is an NFO. We do not have proper data yet. So if you're looking for funds to add to your core portfolio, even for that, this NFO will not be suitable. So avoid investing this fund into your core portfolio, as if it can underperform, it can definitely significantly impact the returns in your core portfolio. And also, even for a seasoned investor, it is very hard to know when to enter and exit from a thematic fund. So it's better to avoid investing in an NFO like this. And also, as an investor, you can definitely consult with a financial planner for more professional guidance, because they will look into the suitability of the fund's investment objective, risk profile, and overlap ratio and allocation to see whether it aligns with your risk tolerance, your investment goals, and time horizon, and be able to guide you better. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.